If we could begin with financials, because obviously it's a sector that people are very concerned about at the moment in Europe. Is this drop, and it is quite a significant one, all tied in with the sovereign debt crisis?
I think it's a combination of the sovereign debt crisis, but I also think that there's a downstream consequences as to if we actually see more remedial economic growth forecasts come out. I think that's going to probably be playing in, and I think those numbers are very dynamic. It's a very fluid situation. They could be worse.
Indeed. Now, how do you go about measuring these kind of numbers in such a dynamic situation?
Well, in Europe, basically this is a consensus number. We have literally hundreds of contributors from the sell side, research producing shops, and we create a consensus. It's that simple. And we actually take the mean of those, so we are able to get a kind of a flavor for where the analyst community as a whole envision this, and it also takes out kind of the outliers. So you're not distorted by the min-max effect. Yes.
Now, utilities are also expected to be hit. Is that all to do with consumer confidence?
Well, utilities also have sensitivities. So let's look at energy, right? Utilities are big consumers of energy. So what typically happens is you look at the correlation between these two. Well, energy is doing well. It typically means that if you're not doing your hedging right at the utility, you can get kind of yourself in a bad place, and your costs go up disproportionate to your regulated prices. So they get squeezed.
Now, it might be quite surprising to see that there is this quite a huge growth predicted in materials.
Well, actually, but that also could be somewhat of an inflationary-driven situation here, because what we really don't want to have, but though we can get to that point, is some sort of stagflation type of environment. I mean, what we're trying to do here really is rationalize what the analysts might be thinking, and this actually, they have lots of different opinions of why this happens. But there is still, positive growth in the emerging market areas. Even if it cools down, there's significant demand there. And, the funny thing is, there's actually some green shoots, albeit very tenuous right now, in the United States, and that will keep a little bit of pressure upward on the materials.
That's nice to hear something positive being said about the United States. If you compare where the United States is compared to Europe, are you much more optimistic about recovery in the U.S.?
Oh, yeah. I mean, there's night and day. I mean, to be honest with you, I think the only thing, look, the U.S. has a long-term problem in its housing market. That's going to sit over this market for a long, long time econometrically. But, we've had some, at least a modest uptick in the jobs thing. We still have stubbornly high unemployment. We've had decent industrial production. We've had a robust consumer, even with the Black Friday numbers. They actually looked reasonably good. So there's some things that are positive there, but to be very candid, what's happening over here could sap some confidence over there and create a real situation over the U.S. and sap the life out of that nascent recovery.
Are you convinced that there will be a double dip, a downturn in Europe?
Oh, I'm not convinced of anything, but I'll tell you what, I think the odds are going up. I think if you'd asked 3 days ago, people would have said the odds were better that there weren't be, but this is getting pretty scary. This is very different from the 2008 crisis. 2008 crisis in the U.S. was about private assets being, consumed by the government, and this is very different. Who is big enough? Is the ECB even big enough to take care of a Greece and an Italy? Can they expand their balance sheet? And if they do so, what are they really doing? They're monetizing the debt. And if you look at spreads, that would sort of suggest that process is already has to be, that's where the market sees this full outcome.
Okay, well, that is a fairly worrying situation. But thank you very much indeed for talking us through it. Michael Thompson there from S&P Capital IQ. Thank you.